This could possibly be one of the busiest trading weeks of the year. Stay tuned, traders. We'll be right back.
A big week for news on the calendar this week. We've got the ISM Manufacturing PMI tonight, 11 o'clock New York Eastern Standard Time. Tuesday, we have the RBA rate statement for the Aussie government, Aussie dollar. Wednesday, we have New Zealand employment and unemployment rate change. The ISM services on Wednesday night on New York, 11 a.m. New York Eastern Standard Time. This is Perth time on my charts. But then, of course, we get into the Bank of England on Thursday, and payrolls on Friday night, unemployment for the Canadian government, and the Fed on Thursday morning, Friday morning my time, Thursday morning, Thursday trading session for New York time. But also, obviously, the big one is the U.S. presidential election, Trump and Biden. So a massive week of possible market volatility. It's probably going to be lots of movement. And again, just a ton of news this week, especially with the election.
G'day traders, I'm Stacey Burke from Stacey Burke Trading. We're about to start off probably one of the biggest trading weeks of the year. We have the U.S. election on Tuesday in U.S. time, and we have the Bank of England this week, and we have non-farm payrolls, just to name three of the potential major movers for a week that could be filled with tons of volatility. We had a week last week with textbook trade setups. Again, my major three pairs: pound Aussie, pound USD, and gold. I talked about using the 15-minute charts. I'm going to go over some basic things again. I've been busy with emails and answering questions all weekend, as well as managing my three kids' sport. But today we're going to be going over some of the, again, hammering in on the basics. We're going to be talking about timing, the importance of timing and knowing what you're looking for in the 12 candle window, the importance of understanding where the money is and why the market is trapping people down low or up high before moving to the other side to hit stops or trap or stop out traders who maybe already be in profit, or to stop out traders who are in the wrong direction, but also just thinking in the big picture. We talked about using the box. Price is always forming a box, a high and a low. This morning was a perfect 33 trade setup right off the start of the Asia 12 candle window on gold, and it went right back to the other side of the US session swing high from Friday night. So again, just to reiterate, keeping trading as simple as possible creates certainty, and I specifically myself stick to the minute on my timing windows. And I think it's imperative to understand that outside of these hours, to me, that's a 50-50 zone. There are lots of opportunities, but again, just in terms of maximizing screen time down to a couple of hours, 3 hours, and then understanding, are we up high, are we down low, or are we inside of the high and low? Another example on gold on Friday, inside of the high and low. Europe, London 12 candle window, that's a squeeze setup. They went right back to the high and continued that for a measured move into the open of the US equities hour for a 100 pip move back inside of the range. So some simple concepts. We saw a textbook perfect trade on the pound. We'll review that on Friday. The London candle equity hour open at the low of the day for a 50 pip plus move back through the high of the day. Simple, simple, simple. So let's review. Structure. I'm always looking for rectangles, whether we're down low or we're up high or we're in a big Monday, Tuesday, a Friday, Monday, Tuesday, a Monday, Tuesday, Wednesday rectangle. And then I'm asking myself, we've got a high and a low now. Are we working back into one side for the trap in the other direction? Do we break out and pull back for a continuation now of a measured move of that geometry? That could be down a smaller pattern within a larger pattern for the reversal, or we could just be in a very large range that breaks out to do an extension of that move to fulfill the weekly average range, or to continue a strongly trending market. high of day, low of day. So again, understanding that high of day, low of day, we've got the previous day's highs. We can be inside of a previous session's high and low, as we saw in gold this morning, inside of the US session high and low, a 3 push creeper down into the open of the Asian 12 candle window, hitting stops. That's a 33 setup. First 15-minute bar took off and did 100 pips from bottom to top, 50 bit round number box. And again, simple. They went to the other side of the range. They hit the stops from the US session high in the swing high, and then pulled it back in, and now we're in consolidation. So for me, the timings window is critical, because outside of those windows, even though there are opportunities, a lot of times that can be an area where traders can get caught into what looks like a good trade setup, and then it ends up just trapping you in there, and you're sitting now waiting inside until the next 12 candle window starts, when at some point again they'll come out of that range and hit the stops at the high or the low. And the reason why, obviously, is because that's where the money is. So we talk about where the money is. Just to review, if we have a high and a low, high of the day, high of the session, high of the week, low of the week, I don't want to trade in here, because we'll even see moves that look like they're trending, and the next thing you know, they're going back down to the other side. If I'm going to be targeting asymmetrical risk reward, so again, I had a trader a few weeks ago ask me, why don't you just take 10 5-pip trades? Now, first of all, I'm going to say there's 50 pips a session. There probably will be at least 50 pips a session almost every single day this week. So not to say you need to trade all those, but because of the potential volatility that we're about to possibly encounter with the election, BOE, payrolls, we could see some very large ranging days. Gold on most days will move 50 pips in every session or more. So if I'm targeting 5 pips, I'm going to say this, even on a 1-minute chart, you're going to be risking 12 to 15 pips on average. So I don't know, for me, that the math doesn't add up for that. I'm going to risk 12 to try and get 5. You better be right 8, 9 times out of 10. I would rather risk 15 to 20 and be targeting 50, 100, or 150 pip move, especially if this is the low of the week. High of the week, low of the week. So when I'm talking about asymmetrical risk reward, I'm talking about not being caught inside at 50-50 moves. I'm looking for where the opportunities potentially are maybe 90-10 on the outside. Now that doesn't mean I'm blindly counter trending. I'm talking about like this morning in gold. US session high, 3 push creeper down, they hit the stops, they pulled back a second time, and bang, they were gone. And that moved 100 pips. It went up 50, and then another 50 pip box in our round number scenario. So just to reiterate about creating certainty, I'm going to suggest that understanding whatever you need to do to create certainty in live time. I've dialed everything back step by step down to the minute in this 12 candle window, to the numbers, to the price action, to the high and the low of the day. Understanding that I need to be paying attention to the clock, the rotation of those candles in the hour. I've talked about the first and the last candle of the hour. We've talked about a 3-bar reversal forming a pin bar at the high or the low. The halfway point in that 12 candle window is often where we'll see high and low formations reverse. And if you think about it mathematically, okay, that's the 50% area of that 12 candle window in terms of timings. Algos, quants, time and price. And the reason why I'm looking for engulfments and pin hammers is because if they're going to reverse the market, or if it's a breakout pullback continuation, we're going to see an area of volume get trapped. And then they're going to come back and retest that with the pin hammer. That's the stop hunt on the traders who are in the right direction before shifting away, maybe consolidating for a bar or two, and then shifting away. So again, just timings and understanding the clock. A 1 ATR stop, so people have asked, 1 bar, 1 ATR. If I'm at the high, okay, so if I'm getting in the market up here, and the high is here, okay, my stop is here. Or 20 pips, whatever that may be. if they've already put a pin up through here and it's a 35 pip pin, I'm still probably going to lock in a 20 pip stop, because if they're going back towards that pin now can become a flip zone for a measured move. So if I'm confident that that's the trade entry for me, I have a 1 bar stop. If I'm in here somewhere in the middle, okay, you might have your stop at 1 bar here too, but you know, again, you're caught inside. You don't know if that's going to be trending. It might be trending if it's a Monday, Tuesday, Wednesday trend day back to the high of the week, but the trade will already have been put in place off the high or the low of the day. So you're trading with the trend. But when you're intraday, if you're inside of the high and low of the daily range and we're outside of the timings, or we're inside like we saw in gold, they put a high in Asia, they put a low in, and then they worked it inside with 3 pushes for the W, came back and did the measured move. So I'm always looking for the high and the low to be locked in. And if we're outside of the ranges, if for example on gold we went up to through the previous day's high, they extended it out in that first hour. So again, the importance of understanding the equities hour, especially in the New York session. The equities hour, when that market opens and we're outside at a new high or a new daily low, that area, again, when the equity market opens, is a high prime area now for them to be possibly reversing the market. And one of the reasons why is because the person that started that move off, maybe at the beginning of that 12 candle window, is in the money. And especially on a Friday night, they're going to go back and make sure that somebody gets stopped out and doesn't take that money into the weekend or close out the trade with a profit. So, timings. My clock has not changed. WA, we're still on the same time, but I stick to New York times. I received probably 50 emails asking me questions about timings. I work off of New York time. Nothing has changed for me. Nothing was different last week. I know the UK went back an hour and a I work off of New York time, 8 to 11 p.m. for Asia, 2 to 5 a.m. for Europe, London, and 8 to 11 a.m. for the New York session. New York Eastern Standard Time. That is the only time that I pay attention to. I have no idea what my server time is. My candle times are different. I don't care. I know what my window hasn't changed. I work off of New York time. Round numbers, 50 pip boxes. Double zeros and 50s. We talked about this last day about lock. The quarter levels will often be extended stop hunts, but the trade itself will often move in a 50 pip box. So that brings us to the next question. Just to reinforce, there are 2 types of trades. There are creeping trends and there are stop hunts. Creeping trends will tend to move in waves. When you get a wave formation, they will end in one of 2 ways. They will blow off in the direction of the trend, or they will reverse and go in the other direction, like a squeeze. Those are stop hunts. That's why we'll see a market move in a 25 pip box for 6 hours, and then in 4 candles go 50 pips. Because once they've locked in a level, they're going to move very quickly and aggressively to stop out the traders that are in profit or that have their stops at the top of the range. Again, they're following this market down. Okay, so just to reinforce, a creeping trend. Okay, and 2 things that this gets all the indicators following this. So I'm just going to make a little point here. I've received a ton of screenshots with trades that have 3, 4, 5 indicators on there, trend lines everywhere, asking me to analyze their chart. I will not look at a chart if it's got all that stuff on it. I just won't do that. I use nothing on my charts. So when you send me that stuff, I can't, that's not what I do. I don't look at that stuff. I don't look at all that indicators. Simple. If you send me a blank chart, I'm happy to look at it. But if you send me a chart that's got EMAs and it's got RSIs and stochastics and momentums, and you've got a ADR stops, and then on top of that there's trend lines, I have no idea what that is. I don't know. I'm not being negative. I'm just saying I don't use that. I don't ever talk about that. I don't want to look at it. But when we see a creeping trend, we're either going to see that blow off, or they're jammed in and they're going to go back the other side. Understanding the major factors that will help us interpret that is the price action, engulfments and pin hammers, and the timing window. where are we in the 12 candle window? Is it outside of the 12 candle window? Is it in one of the pre-market stop hunt hours? Is it at the high or at the low of the previous session? Did they give us a stop hunt down and then an engulfment back the other way, locking it in? Just little things. And again, to reinforce, if you're not sure what those look like, print off your charts and start a little scrapbook of your best trade setups. Coming back to some simple things about being able to process the information in live time. This is really straightforward for me because I'm working on the clock. I know, and so do all the people out there who have been following me for a while, these 12 candle windows. Asia is potentially going to put in a higher or low. If it's in a consolidation and they break out in the Europe-London window, whether they go higher or lower, now we know that London potentially is going to maybe put in a higher or low of the day. And then again, when New York opens, we're either going to be inside or we're going to be outside. And if we're outside, as we saw in gold on Friday, chances are that the New York session is going to put the high of the day in place. So just coming back to some simple concepts as the day evolves, where we're at in relation. Is the Europe-London 12 candle window trading inside of the Asian high and low, just off the highs and lows? Or have we broken out and we're working higher? Again, equity hour, is it a 33 setup? Usually, if we're outside, we're going to be looking at an equity hour trade setup in the London window. If we're heading into New York and we're inside of the London low and the Asian high, we could be seeing a squeeze setup for a stop hunt back to the other extreme. Just some simple things. The same things happen every week. Structure, high and low of the day. Last week was a huge week. Some traders made an absolute killing last week. The timing window, the round numbers, engulfments and pin hammers, 1 bar stop, 50 pips plus or minus depending on the day and the setup and the high and low of the week, where we're at, and then understanding asymmetrical risk reward, targeting geometrical ranges. So you're not risking the same to get one trade. That means your hit rate's got to be very high. And for the most part, when you start to see this, you can't unsee it. So create certainty in your own approach, knowing not so much when you're doing it on a back testing or on a weekend, but how are you going to interpret that information in live time based on how the data is presenting to you. So again, people say, well, I know that the high of the day comes in at this time and that time. I don't know that. I just know that in this 12 candle window, and I'm at the high or at the low, or I'm not at the high or the low, I'm inside, I'm going to wait until they hit the high or the low. Because when they hit that high and low, we're either going to be now in a stop hunt and a reversal, an extended stop hunt reversal, or a trend trade that breaks out, pulls back, consolidates, and continues for a measured move. 3 things that markets do. We talk about this in every video. So big week. There's going to be a lot of good movement this week. So don't try and trade low quality setups. Stick to the very best setups. Again, if you're not sure what those are, go back, look at your charts, look at how they presented, what you best resonate with. I've talked about this before. I'm just naturally more bearish than I am bullish in terms of my ability to execute. Now, again, long trades, short trades. To me, it's the same, but I just have a bias to be able to visually recognize short trade setups quicker, and sometimes I have to interpret that long trade setup to get into it. So the biggest thing I'd like to emphasize today, though, is trade smart this week. We're gonna, I think, see some big moves, regardless of who wins the election. I think we're gonna see some fantastic opportunities. It's not going to be any different than last week. We're going to see stuff up top. We're going to see stuff down below. We're going to see high of the week, low of the week. Answering another question people have asked, can you use this on other currency pairs? I will just say this. Every single instrument that's tradable under the sun, if it has a high and a low, can be traded this way. For the most part, the bulk of most instruments will trade in these timing windows, depending on the market and the commodity. So some of the commodities will trade out of Chicago, potentially maybe at different times, but a lot of that will be reflected in the equity market movements. This week, I think we're going to see some fantastic opportunities for traders, again, just to focus and execute some simple trade setups, keeping it simple in this 12 candle window. Stay disciplined. Keep it simple. Trade smart. Have an awesome trading week. Thank you again for a ton of great comments and feedbacks. Again, keep it simple. If you have a lot of stuff all over your charts, you're never going to be able to interpret that the same way twice. You'll have analysis paralysis. You'll be asking, why didn't it work this time and it worked last time? And just keep it simple. I have a high and a low line. I have numbers. I have a timing window. I want to look for engulfments and pin hammers. That's it. That's as simple as it gets. Last week, there was 50 to 100 pips almost every single day on those three pairs. So keep it simple, stay disciplined, keep getting better, and may the markets go with you.
Just looking at the British pound at the Thursday and Friday, reviewing again high and low, simple trade setups, looking at stuff that moves, how it may move, and different variations of that movement. And again, just also being comfortable and understanding that you're making decisions in live time, having a plan going into the session. Again, are you up high or are you down low? But an example of a trade on Thursday where the high and low heading into the window were clearly defined. Obviously, we had the low of the day, the low of the U.S. swing low, the low of the U.S. session high, low of the overall low of the day, and the low of the Asian session, just to kind of give some parameters of potential boundaries that the market could trade off of. But an example of where traders may have entered into the short trade at the high, expecting possibly the move back down to the low, holding on, possibly not taking anything off, but going to break even, then coming back, being stopped out, and then maybe either not taking the follow-through trade or re-entering the market, although outside of the gap time, we now have a high of the week opportunity for a measured move down. So just an example again where not every single trade is going to be the same. You're going to learn something new every single trade. That's trading. You're going to get frustrated, or you're going to be on your game and you're going to be recognizing the price behavior and taking money off or going to break even, but also having the awareness and fortitude as to why you would re-enter the market after the 1, 2, 3 for a re-entry, and possibly then seeing if the measured move then plays out to the low of the previous day. So just understanding you make decisions in live time. You live with them, you learn with them, you move on to the next trade. You're going to get into a trade setup and you might not take it next time, and it might go right through. So again, that's trading. It's just how it is. That's what the market is. Nothing's easy. You're going to be frustrated at times, but again, if it was easy, everybody would be doing it. This is a zero-sum game, and the market is there to take the money from the many to give to the few. But again, we head into the next day's session. Often I talk about I don't look at the pound during Asia, but just again drawing our highs and lows and understanding how the box may have formed in the Asian session heading into the London window. We see the market making higher lows. This is a dead giveaway for a possible move back to the other side because we have trap volume. 1 push, 2 pushes, 3 pushes into the high, and a middle structure. Again, in the gap 3-hour window. But a golden opportunity as we see the market go and form a low of the day, put a middle structure in place as we head into the equities hour and give us our open drive hammer at the beginning of the London session. A 1-bar stop. We've got our geometry now for a measured move for our W structure at the low of the day for a move back up towards through the high of the day and obviously above the U.S. session, but also a measured move for 50 plus pips. So again, just talking about, are we down low? Are we up high? Have they hit the stops? Well, they clearly took out the low of the day, the existing low of the day. They took out the swing low. This was the low of the week at the time. And obviously this peak formation low was possibly going to hold. They stop hunted into that peak formation. Again, just thinking traders who are in the money, they've gotten them at break even and possibly shaken them out of the trade. But the market behaved as it should. It went 1, 2, 3 to the high with a pullback. Nobody gets a free lunch. extended that move out, came back one more time on the person who got in on the second leg before engulfing, and then extending the move out. And again, we head into the New York session. We have an engulfment of the high bull at numbers after extending the range. And again, a couple traders astutely pointed out to me that was a full expansion of the Asian Europe high-low before putting a middle structure in place, pulling back into the equities hour, third bar, again thinking 3 bars, pin high, that's a pin bar on a 1-hour chart for the stop hunt back into the traders who were long on the second leg out of the London box. Thursday's trade, though, was an ideal setup off the low of the day. A great setup on Friday on gold. We'll look at Thursday as well. Again, just into every single session, looking at where the most recent high and low areas are from the previous session, especially if they were tradable areas where they either engulfed or swung, where traders would have re-entered the trade. So asking yourself the question, if you were in that trade, where would your stop be? Those stops represent orders and the possibility to disappoint a lot of traders who may be in the market who are optimistic. 3 pushes down, going in consolidation. The market then forms a high and low in Asia and begins to work its way back up towards the high of the previous U.S. session swing high. They break out with our double bottom reversal formation out of Asia. They work up in 3 pushes. They hit the stops in the first hour, engulf, consolidate into the equities hour before resuming the trend back down to our first stop, which is the swing low of the Asian longs, pulling back, dropping down and getting traders who have gone long into an existing short trade, consolidating again for the fast move down to the low of the day. And again, just looking at geometry, the high and the low of that Asia-London window gives us one full expansion as well as an extended stop hunt past the previous day's low. But again, in that U.S. session, we get a 1, 2, 3, 4 first hour pin hammer at the low of the day. Exact type of setup that we just looked at on the British pound from Thursday. A different variation, but it's the same thing. We're at the low of the day, first candle, equities hour, pin hammer for a 100 pip move back up against traders that were short. Again, they're in the money, they're out of the money. Then we look at Friday. Same process. We have highs and lows of the bigger highs and lows of the range. And again, low of the week situation possibly in place. But the market also then works in 3 pushes into the close of the session and then hits it a 4th time in that first hour. They clear out stops not only from the U.S. session swing low, but also from the early traders in that first hour. They pin it one more time and pull back. Pin hammer at the opening candle of the middle hour in the Asian session for a 100 pip move up through to the top of the U.S. session box. Now, we'll just look at today because they did the exact same thing again today. Creeping trend down to the low of the U.S. session swing low. They hit the stops right at the open of the first candle of the 12 candle window off the doji for a 50 pip move plus back up through the swing high of the U.S. session as well as the other lower swing high from just prior to that. So again, same setup. Creeping trend down, stop hunt high. Creeping trend down, stop hunt high. Now, Friday's trade on gold is an example of being inside of the high and the low. And again, we talk about creeping trends versus stop hunts. This fast move down is a stop hunt. Then we go into a creeping trend inside of the high and the low. So they've got traders who are long. They've stopped them out, break even, small loss, whatever that may be. They establish the low. The low is now in place. They push into to a second time. They break a bit higher. Some traders may have entered this trade on the what they perceived as the double bottom formation. They come back again, 1, 2, 3, before engulfing and giving us a 3-push pattern and our engulfment reversal back through the high of the day. So in simple terms, we had 3 hours and the market didn't go any lower. And in fact, they did not go past the beginning of the session's pin hammer candle. They came back a third time, they engulfed it, they broke higher, continued that move into the U.S. session open before extending that stop on 100 pips, and then into our equity hour, again, 1, 2, 3, 4, third candle of our equity hour for a third candle. So again, just to reinforce, that 3-candle formation is a pin hammer on our hourly chart if that next candle is a bear candle. So if we break the low of that candle, there's our 1-bar stop. We're in the equities hour, but we also know that the traders who are in profit down here need to get stopped out. This is now a reversal. We've hit the previous day's high. The market drops 75 pips before pulling back almost 75 and then dropping again another 50 pips down to get traders who were caught long and also get traders who were caught short. But they got the traders who were long off the beginning of the session. And again, today we can see them as we still are in the gap time, heading back towards traders who were short off the high of the 3-hour Asian 12-candle window. So some traders have shorted this market, and they're going back up to get traders who are short. I've talked about one of the reasons I don't trade in that gap time is that it starts to become a 50-50 scenario, and I would prefer to stick to the highs and lows. As we can see, they move quickly when they move, especially when we head into the 12-candle window. This week we're going to have probably lots of volatility. Play great defense, traders. Keep it simple. Stay disciplined. Stay focused. Have a great trading week, and may the markets go with you.
Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.